Let me guess. You've been learning price action for years, you know your candlestick patterns, support and resistance maybe. You've watched 200 hours of YouTube, but you're still losing money. Let's analyze why. What you think is price action is actually probably just retail noise. Today in this video, I'm going to show you why 90% of traders fail and how liquidity and higher time frame bias is actually going to make you profitable. So going into the chart, price actually moves according to where liquidity is lying. So in this case, we have liquidity lying up here, we have liquidity lying down here. So when price actually swept these liquidities, it actually went to the other liquidity. However, we know this is bad price action because of the complete chop that we have here. So after seeing this chop, do we really want to be in the market? Ask yourself that question. Do we really want to be in the market? The answer is no. We don't want to be in the market. Why? Because let's just say we enter a trade right here. We enter short right here. What's going to happen? Your target will probably be this liquidity, right? However, you're going to get close and then boom, you're going to lose. Notice how it just doesn't work. So what I want you guys to start doing is just not trading during these times, especially when the market is just completely choppy and just going bouncing in this range. And this range right here is extremely important because once we break out of this range, we should see some sort of movement to the downside, or for example, if we break out like this, we would see some movement to the upside. So that's what we should be waiting for, especially when the market actually opens. So in this case, it's 2 p.m. to 3:15, so there's not going to be any crazy volume, but let's just play this out. And I'm going to show you guys why this is super important when it comes to our trading. So, okay, look, we finally broke out of this range right here. This would be our range. So we're expecting maybe a sweep of this to go to the downside. That's essentially how I'm reading this price right now. And why is price even important in the first place? Price is important in the first place because, like I said before, like I mentioned before, we don't want to be entering trades in this area because we're just going to get stopped out. And like, why would we want to be taking trades when the market is not at its most optimal? As traders, we should be trying our best to mitigate our risk. And by mitigating our risk, that entails that we don't take trades during these times. So let me show you another example. Now here's another example of atrocious price action. So as you can see, the market is just literally going sideways. We don't really have a clear direction of where market wants to go. We don't know if market wants to go up or down. So when market sweeps a big range, it tends to go the opposite way. I'm not saying this happens in all cases, but it tends to. So that's why this range is very important. So with that being said, I'm gonna wait until market comes all the way down here before even thinking of placing a trade, because most traders are like, oh, I need to place a trade, I need to place a trade. Like, you guys have to understand one thing, and one thing very clear: you don't have to be trading every single day. And that's where most traders fail too, because traders think that the more trades I take, the more money I make, and that's just a flawed way of thinking. Because think about it, the market is here to take your money. So the longer you're in the market, the more likely you are to lose your money. And also vice versa. However, we're in the game of risk management, and taking a bunch of trades in a single day is just not going to play out well. You can try it for yourself and see for yourself, but just from my personal experience, you do not want to be in the opposite end of taking more than 2 trades a day. So going back into this example, I'm waiting for price to come down. I'm going to see if the momentum actually gives me what I'm expecting it to give me. So it looks like we just completely ran through this range. So let's see if we get this upside momentum. Looks like we are starting to get some upside momentum. Let me see if there's even a trade that we could actually enter off of. All right, so I do see a potential setup on 3 minute and the 5 minute. So in this case, when the fair value gap is so large, I'm gonna probably be taking on the 5 minute. So off the 5 minute close, I'm gonna be waiting, and let me see if it actually closed. It did not close. So here would be the close on the 5 minute. So I would enter the trade here, probably target some higher time frame liquidity. So remember what I said before, we got out of this range. We took out the lows of all this range, and now it looks like we're gonna be reversing. You could have your break even at this high, or maybe even this high, but in my opinion, they're too close to our entry. I do want to be waiting for a higher time frame break even, which is over here. And let's see if this play actually works out after leaving our range. Okay, looks like our break even would have been hit, whether it be this one or this one. So now looking back at it, we would definitely have our take profit right here, at least our first take profit. Maybe we take out 90% right there. And let's see how this play actually turns out. It looks like we hit our 90% take profit, and eventually we would leave a runner to these highs. Do I think we're going to hit them? I mean, who knows? We probably are, we probably aren't. I don't actually know. However, I'm just using the market and the price that it's showing us to kind of determine where I think market's going to go. Now, piggybacking off what I just said, market tends to reverse off sweeps. So we could easily see a sweep of this liquidity, maybe going down here to just come back up. However, I just want to be in and out of the market. That's where my mind goes when I'm trading. I want to be in and out. I don't want to be holding for a long period of time, because guess what? The market wants to take your money, and I don't want to be on the opposite end of that. So let's see what happens. Looks like we did end up getting break even, but luckily, like I mentioned before, we would be taking out 90% of our position, which is the most important part. Now I'm going to show you guys one more example to show you guys my thought process behind what I'm actually thinking when I'm trading the market. All right, so I want to show you guys this perfect example of what pretty bad price action looks like. So as you can see, we're kind of just chopping around, waiting for something to happen. I noticed that we did sweep this liquidity right here, so I'm expecting a move up. So now I'm going to play it out to see what happens. So it looks like we broke out of this small range right here, kind of closing above the range, which means price is most likely going to target these liquidities up here, especially this data wick. So going to the 2 minute, we will definitely enter off this 2 minute. However, do I really want to be entering this if the price action is bad? Probably not, right? So this is the exact reason. So why did this play not work? Usually we would enter off the close above this inverse fair value gap. However, the close is up here. Stop loss would be like this, kind of a big stop loss. Obviously, target would be this high. And our break even would usually be at this level. However, since it's super close to our entry point, I would probably move it up here. But let me show you guys why trading in this terrible price action can screw you guys most of the time. So as you can see, I'm playing out the market. Why are we dumping? You might be asking. Because the price action is nuts. So that's exactly why we don't want to be trading during this time. Yeah, the play looked good. It literally looked like an A plus. The only thing that was missing was a price action. And that's extremely important when we're trading. We don't want to be trading when the market is choppy because moves like this happen. And I'm trying to reiterate this point onto you guys because this has costed me so much money trading during these times of pure chop. So I want to at least get out of this, maybe take a sweep. I see market is probably picking up here, so price action is looking a lot better. So maybe I will take another trade during this session. However, all of this was telling me not to trade during this time. So going into the 1 minute, I see some gaps forming, a sweep right here, which is telling us market definitely wants to go up. I like this momentum going up. So that's telling me price action is probably starting to clear up, and that's a good sign for me to take a trade. So let me see if something actually sets up. So I'm trying to play price a bit and see if we actually get a move. Let me go in the 30-second. So this is definitely a data wick, and that's extremely important because market likes to magnetize towards this zone. So am I bullish on the day? 100%. We have probably potential SMTs right here. We have a sweep. We have extremely bullish momentum. That's telling me market definitely wants to target a higher time frame liquidity. So let me see on the 30-second if we actually get a move or not. Okay, I see a move up. I see a move down. Okay, I see a potential inverse for value gap right here actually. Okay, this is a potential entry point that we can get. Why? Because we have a lower time frame sweep right here. So now this trade, all this trade is missing is momentum going up for it to be an actual A plus. So let's see what happens. Okay, we see some sort of momentum. We have potential SMT right here. Okay, I like this momentum, and it looks like we ended up getting this close. So I'd be entering right here, put stop below this gap. Actually, this is a double gap. So I definitely put it under this one too, just in case. And obviously target would be these data highs. So you might be thinking why this is an A plus trade, because it actually checks off all of our boxes, especially with our target, our inverse for value gap, a sweep of liquidity in the lower time frame, and obviously the momentum, which is telling us the market definitely wants to go up here. And we are in pretty good price action. Why? Because we have these gaps forming, we have some rejections happening, some sweeps happening, market's actually respecting what it's doing. So that's telling me that price actually cleared up, and that's extremely important when we enter a trade. We want to make sure price is cleared up. So if you want the free checklist, click on the link in my bio on my YouTube channel. So going back into the trading, let's see how this play turns out. Okay, at this point, we would definitely have our break even right here. Why? Because it's the closest high to our entry point. Let's see what happens now. So it looks like we did end up hitting in this trading session. So we went from looking at this horrible price action, maybe potentially saying I'm not trading today, to this good price action forming right after we left this range. So what's the lesson out of this video? So the lesson out of this video is don't trade during a range. We want to wait until the market exits out of the range, maybe sweep some sort of liquidity, and then we want to wait for momentum to start picking up. That's when we want to be trading, and that's when most traders fail when trading the markets. If you want to be taking trades like me every single day, click on the link in my bio, and I'll see you there.